Well, it was a pretty amazing recovery from Friday's doom and gloom, and we've seen global markets around the world rally back, despite the fact that over the weekend, Hungary's IMF credit lines, EU IMF credit lines were pulled. You actually had the Celtic Tiger, Ireland, downgraded by Moody's. You certainly have a lot of anxiety ahead of the stress test where the results should be released midweek. And the trader's view is going to be that you saw a counter trend rally into these numbers, and there's going to be very little to rally on, especially the need to raise somewhere in the neighborhood of 80 billion euros. So where does the good news come from? And a lot of it probably emanates out of China, where there's an announced stimulus plan on 7 strategic sectors that's at least reported in the China News Daily, and that's something that, while I can't confirm, certainly makes some sense. Wall Street Journal reporting this morning that China's power consumption and demand is now outstripped that of the United States. They're #1 in the world. So on a low volume move with the view that China could be the linchpin again, you may have had enough to see the world recover. I will say that you're seeing iron ore prices up. They were up on Thursday, they were up on Friday in very risk down markets. We really like miners here and think that this is probably the place where you're going to take some risk on, have a slightly upset stomach through the point in which we can get out of this growth fear cycle, but that valuations here will hold you in pretty good stead. On the back of that, you've seen good price performance in emerging this morning. Again, all relative to where we expected we would be, but most people making note of the 2% up move in China. Actually was up at 3% at one point. Rest of Asia's down to flat. The story in Central Europe, though, is Russia's up, crude's up about 0.75%, and you're getting pretty good follow through from anybody that's commodity related this morning. As you're seeing the Dixie take another move down, slight, but it looks like this 80-50 trend on the Dixie may be where you rest before seeing any major turn. So there may be a little bit of there may be a bit of a bid to the dollar here and there, but that the trend probably holds to that level before you start to see reversal. In the meantime, that also supports your commodity trade. The other thing that people are talking about, which is a little absurd, but nonetheless they're talking about it, is that the Baltic Dry Index reversed its 37 session downward trend, or since May 26th, this thing had moved down over 45%. And a lot of people, at one point, this was a real leading indicator for the world economy. I'm not sure it's got the same credence as it once did. Heavy ship supply. It's a noisy data point, and but it is something people are talking about. So after what looked like the sky was falling on Friday, it's a much better place this morning. We're still in the middle of U.S. earnings, and hard to know where people are going to get particularly bulled up about their growth outlooks. The other thing to watch this week are housing starts and a bunch of housing data in the States. Thanks.